Listen to this podcast now
on the Red Apple Podcast Network. The Leadership Thread with Dr. Peggy Polonis.
I'm Dr. Peggy Polonis. Join me on each episode where I unravel the story that shaped leaders, tracing the thread that led them where they are today. Because leadership isn't born in adulthood. And thank you once again for joining us on the Leadership Thread, education, ethics, and sustainability.
Download all of Red Apple Media's podcasts right now through your favorite podcast platform.
Listen, all you New Yorkers. Taxi. Okay, we're looking around.
This is the 77 WABC minicast.
Well, we're going to talk about stocks. Stocks are a lovely thing to talk about. Big numbers across the board. Actually, of course, this past week, markets were very strong, up about 1.5% to 2%. The NASDAQ doing even better, up 4.5%. But one of the things I want to talk about with our distinguished guests, it looks like, if I read this right, small cap indexes, the S&P 600 year to date is up 14%. And the Russell 2000, which I think is a small cap, that thing's up 15%. So those are the leaders. Now, the S&P 500 is up 8%, and the NAS is up almost 13%. So everything's good. The Dow, slowest one, 3%. But in any case, why is small caps doing better than the big caps? Let's talk to our guest, Jeff Kilburg, CEO of KKM Financial, Pete Najarian, co-founder of Market Rebellion and Option Monster. Gentlemen, thank you. Jeff Kilburg, small caps, everything's doing awfully well, driven by profits and profits. It's an earnings bonanza, according to a Bloomberg story. But why are the smaller cap indexes beating the big caps?
Well, Larry, wonderful to be on with you, and what a pleasure to be on with my first boss, Pete Najarian. Just an awesome human being, and we can talk about that. But let's talk about why we're so excited, why the S&P 500 is above 7,400, why we've had this snapback rally, and why the bears have been kicked in the absolute teeth. It's because of profits. It's because of these profit margins. We typically, Larry, on the 10-year average, we've seen the annual growth year over year at about 8.6%. We're currently trending at 27.7%. That's 3 to 4 times. You got to check my math from my Notre Dame days. And I wasn't a math major. But that type of growth is certainly being injected by these smaller participation companies. So I get excited, but Pete's going to put a finer point on it for me just because he's smarter.
But wait, did I hear an answer there? Why are the small caps outperforming the big caps?
Because of the broader participation. I think you're seeing, we've talked about the great rotation, we've seen the Mag 7 repricing, and all of a sudden, with the anticipation of Warsh coming in, with the anticipation of rates coming down, you are seeing the small caps participate. But the real winner so far year to date, Larry, it's the semiconductors. SOX, it's up 65%.
Yeah. I couldn't agree more, Larry. Jeff's a very smart guy, and I know he's downplaying it, but the reality is that the entire market is getting this sense of urgency to continue to buy, and that's what we're seeing. And all you've got to do is look at what do the earnings look like so far as we've gotten into the most recent earnings season. Well, we're 85% beats, so I think that speaks volumes about what the mentality is right now of looking at the markets. I think looking the right way, which is, hey, look. Earnings are strong. Revenues, for the most part, are extremely strong. And this is an economy that's far better than we constantly hear about how bad it is. I don't embrace that at all. I think those guys are still thinking about things years ago, not things about what's going on right now. And we're seeing that more and more, Larry, where I think there's a comfort zone that people have right now. And certainly, is it AI? Yeah, absolutely. That is one of the biggest attractions that people have. That's what's moving semiconductors and all the rest. But it goes deeper than that. We also had monstrous earnings this past week from names like Disney. So it's not just the AI trade, but the AI trade certainly is the leader.
Well, I think generally it's a profits boom. Maybe the best profits boom in 20 years.
Yeah.
And you're seeing profits of the mother's milk of stocks, and you're seeing it across the board. By the way, I went and looked. The SOX index up 66% year to date. That's really something. I didn't realize that.
Remarkable.
It is remarkable.
Remarkable.
Just kind of blows right off the page. Why is that? I mean, I thought people were saying that semiconductors weren't the place to be.
Well, I'll jump in real quickly, but I think the software apocalypse, we saw IGV, which is the ETF, which follows all software, because seemingly AI is replacing every software. I don't believe in that narrative, but you've really seen people kind of go into the semiconductors, and you look at a name like Intel, which President Trump came in and took a 10% position just last fall. It's only up about 500%. That was a good one by the president. But if you look at semiconductors in general,
you'll encourage him to do more.
But AMD, Broadcom, Micron is just on an absolute tear. But of course, some of these names that we actually own, Larry, in our Mango Growth ETF, ticker symbol Gary. That's the growth ETF that I manage. We own these semiconductors. We've kind of stayed away. We are nibbling at the Palantirs and some of the software. But when you see this leadership refocus back to some of these chip names, it just seems to kind of underscore the fact that the demand for chips is insatiable.
I totally agree, and it goes even deeper. I mean, Jeff just hit the most important ones, I think, but it's not just Micron, it's not just Intel, it's not just NVIDIA, it's not just AMD. You've got names like Western Digital and Seagate, and the list goes on. And so this is something that is very broad. It's not something that's very narrow, and we have to be overly concerned. This is broad buying for a lot of the different parts of the market, whether it's storage, whether it's memory, whether it's whatever. That's what I think has been so incredible. And Larry, we kept hearing from so many people that this is the AI boom is done. Everybody, this is for the last 6 or 8 months. I can't tell you how many times I've heard people come on various networks telling us it's done. Well, they have missed an unbelievable rally, absolutely unbelievable rally. And, look at what names like a Micron has done in just the last 3 months, 6 months, 1 year, take your pick. Absolutely extraordinary numbers getting put up by not just Micron, but take a look at that one. Take a look at Seagate. Take a look at Western Digital. Take a look at any of these names that are the names behind the big names, and they're absolutely crushing it right now.
I see the VIX index is down to 17. Mm-hmm. You always tell me to look at the VIX index, so now I'm looking at it.
Well, and Larry, the interesting thing about the VIX is, everybody gets so overly concerned, I think, when we pop back up and we get up there towards 20. It's up towards 20 oftentimes for a reason. And obviously we've been even much higher than that, but we've been very, very slowly but surely getting a little bit more taken off from the VIX, it feels like almost every day. We were in the 16s just yesterday. So, it just shows you that, yes, we closed a little bit above that. We're in the 17s, but volatility is definitely starting to come out of the market, which, can be a good thing. It doesn't mean that it's a freebie going forward, but it does mean that we're getting a little bit back to the norm, and I think that's important.
One thing that's interesting.
And that's all in the face.
No, go ahead.
That's all in the face of oil at 95. Crude oil still at 95, stubbornly at 95. And the 10-year note kind of at 435, 440. So the fact that the VIX is coming down and dripping into 16, 17, it's remarkable. This rally has been remarkable, and it just goes to show you this isn't short covering. This is actual broad participation in revealing that the U.S. economy is hitting on every cylinder.
Well, it's interesting. Yeah, you've got high oil prices and gasoline prices from the war, blah, blah, blah. But also, we never had any Fed easing. And as you noted, the 10 years, 435, it's been bouncing around in a range. But it's not, rates are not collapsing. The Fed's not easing. The Fed probably shouldn't ease right now. They may ease later in the year or not. But stocks didn't depend on that. I mean, it just goes to show you what profits can do. There's a lot of people obsess about the Fed, and they obsess about the target rates in the Fed, and they obsess about the goofball that's leaving the Fed, which he should leave the Fed, but he won't. Kevin Warsh will come in. Kevin will be a good reformer. But the point is, profits just seem to dwarf all this other stuff. It just dwarfed war, dwarfed interest rates, I don't know, dwarfed all the naysayers, dwarfs all the left-wing legacy media that's trying to talk us into a recession. It's fascinating to me. And it's almost, out of the blue, look what's happened. It's a wonderful thing.
Yeah, I totally agree. And by the way, it has been very difficult. At some point, we've got to get a deal with Iran, and it's going to have to be something that's going to really truly stick. It's not just something that it's for this moment, and then all of a sudden they go back on their word. So, once that happens, Larry, I think we start to return very rapidly back down towards those levels that we've been used to over the last couple of years, which is call it crude sitting somewhere between 65, maybe even up to 75. But here at 94, the other day we did get back all the way down towards 90. I might even have broke 90, but it rapidly came right back. But that will be the key, and that will be an unbelievable lift, I think, for the markets, because when we've seen oil getting slapped pretty good to the downside, we certainly have seen the market start to understand how quickly the market could be a lot higher even than it is right now. And we are at record highs, it seems like, at just about everywhere you look. But that gives you a lot more reason to be that much more bullish if we can get this deal done and if we can get oil back down towards prices that at the pump.
Pete, you're right, because I think if we see crude oil futures going to $80, that's the all clear. Now, certainly this off-ramp has been navigated. There's been a couple potholes. Seemingly we're running out of people to negotiate every time we talk to somebody that they're not there anymore. They're eliminated. But the fact of the matter is that you are seeing some optimism. Markets typically bottom before this, but this Iran conflict is actually going to be quite disinflationary. And from my perspective, I think the supply chains, in the same way supply chains were rerouted post-COVID, you're going to see oil in the Strait of Hormuz not really be that material in crude oil and Brent oil. So therefore, I think you'll see the price of crude go under $60 in the next 6 to 12 months because of the disinflationary component of all the supply chains being rerouted by Saudi Arabia, et cetera.
But we're the biggest producer of oil.
Yes.
We're the biggest exporter of oil and petroleum, whether it's diesel, gasoline, oil. I mean, I'm just, energy is the best performing year to date of the top 10, up 23.7%. So call it 24%. In other words, you don't want oil to crash, right? Because we have a big industry. It's a very important industry. I'm sure you guys saw the TV series Landman.
Yes. The best.
I know. I can't wait for it to come. I'm jonesing for it to come for the third season. But it does give you some interesting facts and figures about the strength of our oil business and how important it is. Yeah. I don't know what the break even may be 65, maybe lower, maybe higher. I don't want it to crash. But I just think it's interesting, at 90 to 100, the stock market has still done great. It didn't kill the economy. I know nobody likes to pay $4.50 for gasoline, blah, 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 more than that in crazy states like California. But it didn't kill the economy, and it didn't kill the stock market. That's all I'm saying. It's an interesting little factoid.
Yeah. Well, absolutely, especially when we have to all factor in all the different things that are caused because of the price of oil and all the different moves. And it's not just going at the pump. It's a little bit of everything, right? Going out to dinner.
Permeates.
Yeah.
My glasses, my antihistamines. I mean, I have a whole list of stuff that I carry around. You're right. But it still hasn't killed us. I mean, I don't know. It's just interesting.
It came from $60 kind of prior to the Iranian conflict. So it traded between 60 and 70. So we can revert back there. And as you know, whenever you see a back and fill, a big move, you typically have a back and fill. So I think there's a back and fill opportunity. But to Pete's point, we really have to secure this off ramp in Iran, and we have to get rid of the nuclear component, which seems to be the paramount focus right now in the administration.
Well, Israel is in charge of personnel, and I think they're going to do a fine job. Their work is not done yet. They're the HR department. A lot of these Iranian leaders may not make it home tonight. Jeff Kilburg, what is the Fed going to do?
I think the Fed has to sit on their hands. I mean, we definitely have some inflationary data. We're seeing the pass of the baton coming in with Kevin Warsh, but I think he's going to be inclined to sit and wait a little bit and see how, one, the Iranian conflict rolls off. But at the end of the day, what was the potential effect of this crude oil being as high as it was? And I'll let Pete, who also, by the way, Larry, was a two-time captain for Coach Lou Holtz. We have a common Najarian, Coach Lou Holtz here, and I think that's why I got hired by him and his brother John. But as a two-time captain of Lou Holtz, I'll let him put a finer point on it. But I think the Fed is going to sit and wait, but they want to cut rates, and I think that's why your small caps are catching up in the insinuation that we're going to see interest rates move lower. But it's an exciting time to see Kevin Warsh come in and Fed Chairman Powell hopefully have some closure in his chapter.
Yeah, hopefully. Pete, where did you work for Lou Holtz?
I played football for Lou Holtz when he was at the University of Minnesota.
Oh,
and Larry,
time captain.
Yeah, gosh,
I'm his only two-time captain.
I love the guy. I mean, I loved him and had.
He was an entertainer. He was on the Tonight Show. He was phenomenal. I mean, the guy was everything. I mean, he really was, and a special guy for Jeff and for me. Jeff was lucky enough to play for him. So was I. Very lucky because the University of Minnesota, to get a guy like Lou Holtz to come up there was an amazing task. And then he went to Notre Dame and moved on. But as far as going back to this with the markets and the Fed, it sure looks like at least everything that we are seeing, and I know Jeff looks at the CME group thing and all the rest of it, and we all take a look at what the tool looks like, and it looks like it's not going to get any cuts. I mean, the numbers just do add up to the fact that they're going to be pausing for a while.
Yeah.
But at some point, maybe, and I don't think that some point comes until we get pretty late into the year, all the way maybe December, possibly. But even there, I'd be a little bit surprised. And by the way, these jobs numbers,
remember,
I'll tell you, they've unbelievable what they were able to put up. I mean, just fantastic to see how good both the private and the BLS numbers and everything. That really gave the markets a huge boost, I think, on Friday.
Remember, Kevin Warsh wants to hit 2% or lower inflation. Mm-hmm. Just remember that. So he's not going to be in any rush.
Right.
Anyway, gentlemen, thank you, Jeff Kilburg and Pete Najarian. We appreciate it. Folks, we're going to take a break, and on the other side, we're going to do some money and politics. We got Liz Peek, and we got Steve Moore, and I'm still Kudlow, and we'll be right back.
The Larry Kudlow Show on the Red Apple Podcast Network.
The Marine Toys for Tots foster care program is bringing hope to children who need it most. Every 2 minutes, a child enters foster care, often with only a small bag of belongings. More than 400,000 children face trauma and uncertainty, many before age 8. This May, during Foster Care Awareness Month, Toys for Tots is creating Room for Joy. In 2025, nearly 375,000 children received comfort through toys, books, and essentials, reminding them they are not alone. Donate now and change a child's life.